This is PF7-32B. It's a problem that goes through the petty cash accounting system. So let's start with the first one. Explain the characteristics and internal controls of the impressed fund. So the impressed fund has the same balance at all times, which equals the sum of the cash in the fund and the total of the tickets. So you're always going to have the same balance, and it's going to be the sum of the actual cash plus the tickets that describe where cash was spent that used to be in the fund but it has been expended on certain things. So the internal control feature of an impressed fund is that it clearly identifies the amount of money for which the fund custodian is responsible, because since the fund balance is always the same, it clearly identifies how much the fund custodian needs to have track of, basically. Okay, so let's see what information we have. We have some tickets here. We have a balance of $600. We have these tickets. So on September 30th, after we've spent all this stuff, the fund balance should be $600 minus the sum of these tickets. So let's see what it is. So that's the sum of the tickets. That was our starting balance of cash. So there should be $340 in there, right? Because we should have, as our statement above says, the cash in the fund plus the tickets should equal to the fund balance, which is $600. So we should have $340 in there. However, it's saying that we only have $355, so something happened. So how do we basically replenish the fund, taking into account the fact that we actually have only $355, even though we needed, or rather, there is $355, so there's extra money, because we should have only had $340, but there's actually $15 extra. So how do we basically get the fund balance up to $600 while accounting for that kind of discrepancy? So the first thing we're going to do is determine the actual cash we need to get to $600. So we have $355 and we need to get to 600. So 600 minus 355 is $245. So we're going to need to basically add $245 to our cash balance, or rather our impressed fund. So before we do that, it looks like it wants us to do the journal entry to create the fund. So the creation of a petty cash balance involves basically debiting petty cash and crediting regular cash. So what that means is that we're just moving money from our cash balance, you could call it our bank account, to this petty cash, physical cash that we're holding in our office or wherever it is. So this is to open petty cash, and it's going to be $600. So we start our fund off with 100% cash. None of it has been spent on anything. So it's just a $600 cash account. So now we have to replenish the fund. So now we're going to have to basically use this calculation. So again, we have $355 actually, and in order to get it up to $600, we're definitely going to need to replenish the petty cash fund with $245 of cash. So that is going to be a credit to cash of $245. So we know that, but let's see what the debits are first. So basically we look at our tickets here, and we look at what we spent the money on. So in this first one, we bought office supplies, $60. So we have office supplies, it's an asset, $60. And we have some cab fare for executives, so that could be travel expense, $25. The next one is delivery of a package, it's a delivery expense, $45. Then we have business dinner, so that's the entertainment expense, $55. And then finally inventory of $75. So now we've converted these tickets into actual expenses or assets in our accounting book by this entry here. But we're not done yet. We still need to actually get the cash that we need. So we have cash of $245 because remember, we have $355 currently. We need to get it to $600, so we need to bring $245 more out of our bank account into this petty fund balance account. But right now our debits and credits don't match because we have $260 of tickets, which are these, and we're only having a $245 credit to cash because we have this extra $15. So how do we account for that? We have this basically account called cash shorten over, which tracks the cash that kind of gets miscounted or uncounted, and we basically plug our entry with that, and this is the entry to replenish our petty cash fund. Just a note, if we instead of having $355, we had $330, for example, and we basically would have had to plug the hole on the other side. We would have had to debit an extra amount. So cash shorten over can be a credit or a debit depending on whether you had too much or too little cash. In this case, we had more cash than we expected, so it was a credit. But if we had less cash than we expected, then this cash shorten over would have been a debit. Okay, so now we want to increase our fund balance to $800. So if you notice here, there is no use of the petty cash account that we use to establish the account here. We're now, once the fund is established, we're just tracking the expenses and replenishing it with cash from our bank account. But if we want to increase the balance, we then have to bring back this petty cash balance, or sorry, this petty cash account, and to go from 600 to 800, we have to basically add $200 more to our petty cash balance. Okay, so we've kind of done what the accounting looks like for replenishing, establishing, and increasing the fund balance. So now it's asking us, what does the custodian do? The custodian cashes the check and places the $600 of currency and coin in the fund. Hopefully this works. Let's see. Oh, no. Maybe it's 800. Let's see. No. What are the other options? No. Well, let's see. Places two. Oh. Okay, so I guess this was just related to this petty cash increase. So they would have just taken the cash check here and cashed it. But initially they would have done the same thing with this $600. So sorry, it's a little ambiguous, but yes, this question was just related to this particular increase of the balance.